Asha, NK, and all other faculty members, all other members of the College Management Committee. I thank all of you for having a great support for conducting this webinar. Without taking much time, I welcome our institution's head, the principal of MESTO Abdullah Memorial College, Dr. K. Shaji, for the welcome speech. Over to you, sir.
Okay. Can you hear me?
Yes, sir, it's audible.
Okay. Good morning to all. I am Dr. Shaji, principal of the college. Respected our secretary and correspondent, Mr. Nawaz Abdullah. Respected Liaquat Ali Khan, sir, our secretary, MES Ernakulam District Committee. Our chief guest and resource person, Mr. B.S. Binu. Our college management committee members, I think we have Idris are here, Nasser here, anyone, other members, Mr. E.M. Nizar, Advocate Ismail Khan, Mr. T.K. Ismail, Mr. C.S. Salam, Bashir, and Mr. Anifa. Respected delegates, Vice Principal Binay Kumar, IQAC Coordinator Tojin Jos, HOD Mrs. Asha, other teachers, my dear parents and students. Good morning. As a part of departmental activities, besides the online classes which is going on in the college for the last 6 months, we decided to conduct and organize a webinar series on various subjects. We have already conducted 2 seminars, one by IQAC unit, the other by our psychology department. Our department of management studies is conducting this seminar on the topic financial planning to overcome uncertainties. The COVID-19 pandemic makes the socio, economical and cultural changes in the society and also physical and mental changes in human being. The tremendous hike in unemployment and lack of flow of revenue in the society due to this pandemic time creates an hectic financial crisis in the country. We must plan and find the way to overcome this uncertainty in financial problems. Anyway, we have our chief guest and powerful resource person, Mr. B.S. Binu. I hope he will, in some extent, clear our anxieties about the financial crisis which is going on in the country. So I'm moving to my duty. First of all, I'm very happy to welcome our respected secretary and resource secretary and chairman, secretary and correspondent of the College Management Committee, Mr. Nawaz Abdullah, to this function. I also request him to deliver inaugural speech in this for this function. Next, I'm very happy to welcome the Secretary, MES Ernakulam District Committee, Mr. Liaquat Ali Khan, to this function. Next, we have our chief guest and resource person, Mr. V.S. Binu. He is a financial planner and also senior Process Associate in UST Global Kochi. I'm very happy and great pleasure to extend my warm welcome to him to this function, and also I request him to present the main paper to this seminar. I am also happy to welcome the all management executive members present here, especially our Aidurasa Nasser to this function. And I welcome other delegates, Vice Principal, IQAC Coordinate, HOD, parents and students to this function. And finally, I wish you all you being safe and secure and keep social distancing and wear mask and avoid the gathering as possible to overcome this particular and difficult situation. Thank you.
Thank you for your address, sir. Next, for the inaugural speech, we have a worthy person, laconic in speech and amiable in approach. We have our secretary and correspondent of College Management Committee, Janab Nawaz Abdullah, sir. Over to you, sir.
ശരിയ ഓൺ ചെയ്തില്ല, അൺമ്യൂട്ട് ചെയ്തിട്ടില്ല, സെക്രട്ടറി.
I request our secretary please unmute yourself. Yes.
Yes. ഈ കോവിഡ് കാലത്ത് ഇതുപോലുള്ളൊരു വെബിനാർ നടത്താൻ തീരുമാനിച്ചതിൽ ഞാൻ കോളേജിലെ ഇത് ഓർഗനൈസ് ചെയ്യുന്ന അധ്യാപകരെയും പ്രിൻസിപ്പള് എല്ലാവരെയും ആദ്യമായി അഭിനന്ദിക്കുന്നു. നമ്മുടെ മുൻ റിസർവ് ബാങ്ക് ഗവർണർ ശ്രീ രഘുറാം രാജൻ പറഞ്ഞൊരു വാക്കുകളോടെ ഞാൻ ആരംഭിക്കുന്നു. The greatest emergency since independence. അതാണ് നമ്മളിപ്പോൾ ഫേസ് ചെയ്തുകൊണ്ടിരിക്കുന്ന ഏറ്റവും ഒരു വലിയ പ്രശ്നമായിട്ട് വന്നിരിക്കുന്നത്. അദ്ദേഹം വളരെ കറക്റ്റായിട്ടാണ് പറഞ്ഞത്. നമ്മൾ ഇൻഡിപെൻഡൻസ് കിട്ടിയതിന് ശേഷം നമുക്ക് ഇതുപോലുള്ളൊരു അവസ്ഥ വന്നിട്ടില്ല. 1950കളിലും ചൈനീസ് വാറിന്റെ സമയത്ത് 1962 നമുക്ക് പലവിധ ബുദ്ധിമുട്ടുകൾ ഉണ്ടായിരുന്നു. അതിന് ശേഷം ഇപ്പൊ പറഞ്ഞാല് നമ്മളിപ്പോ ഈ വർഷത്തിന് മുമ്പ് ഒരു 40 വർഷം മുമ്പാണ് ഇത്രയും ഒരു മോശമായ അവസ്ഥയിലേക്ക് നമ്മുടെ GDP എത്തിയിരിക്കുന്നത്. ഇപ്പോ കഴിഞ്ഞ 2019-20 കാലഘട്ടത്തില് അത് 4ാം പാദത്തില് നമുക്ക് ഉണ്ടായിരുന്ന GDP എന്ന് പറയുന്നത് 3.1% ആയിരുന്നു. GDP എന്ന് പറഞ്ഞാൽ ഗ്രോസ് ഡൊമസ്റ്റിക് പ്രൊഡക്റ്റ്. അത് ഇന്നിപ്പോൾ എത്തി നിൽക്കുന്നത് -23.9 വന്നെത്തിയിരിക്കുന്നത്. ഇത് നമ്മൾ ആരെയും കുറ്റം പറഞ്ഞിട്ടോ ഭരിക്കുന്ന ഗവൺമെന്റിനെയോ അല്ലെങ്കിൽ നമ്മള് ഇവിടത്തുള്ള പോളിസീസിനെ പറ്റി കുറ്റം പറഞ്ഞിട്ട് യാതൊരു കാരണവും ഉണ്ടെന്ന് തോന്നുന്നില്ല. എന്താ വെച്ചാൽ ഇതിന്റെ എല്ലാം ഇതൊരു ലോകത്തിൽ ആദ്യമായിട്ട് വന്നിരിക്കുന്ന ഒരു വലിയൊരു ലോകമെമ്പാടും വന്നിരിക്കുന്ന ഒരു വലിയ പ്രശ്നമായിട്ടാണ് നമുക്ക് കാണാൻ കഴിയുക. അപ്പോ അതിനുള്ള സമയമെടുക്കും ഇതെല്ലാം ഒന്ന് നേരെയായിട്ട് പോകാൻ വേണ്ടി. നമ്മളിപ്പോ പറയുമ്പോൾ ഇത് ഫസ്റ്റ് ടൈമാണ് നമ്മുടെ ഇന്ത്യയിലെ GDP നെഗറ്റീവിലേക്ക് വന്നിരിക്കുന്നത്. ഈ 23.9 എന്ന് പറഞ്ഞത് അത് അതിൽ നിന്നും നമ്മൾ മുകളിലേക്ക് വരും എന്ന് നമുക്ക് പ്രത്യാശിക്കാം. അതുപോലെ തന്നെ നമ്മുടെ ഇതിലും വന്നിരിക്കുന്ന ഏറ്റവും ബുദ്ധിമുട്ടുള്ള കാര്യം എന്തെന്ന് വെച്ചാല് നമ്മുടെ എക്കണോമിക് സിറ്റുവേഷൻ ഏത് ജനവിഭാഗത്തിന്റെ എടുത്താലും അത് വളരെ ഒരു മോശമായ നിലക്കാണ് വന്നെത്തിയിരിക്കുന്നത്. ഇതിൽ ഫൈനാൻസ് എന്ന് പറയുമ്പോൾ തന്നെ നമുക്ക് എക്കണോമിക്സ് നോക്കേണ്ടി വരും. എക്കണോമിക്സ് എന്ന് പറയുമ്പോൾ വലിയൊരു സംഗതി അതിൽ വന്നിരിക്കുന്നത് വെച്ചാൽ ഡിമാൻഡ് ആൻഡ് സപ്ലൈ. എക്കണോമിക്സിന്റെ ഏറ്റവും പ്രധാനപ്പെട്ട ഒരു കാര്യമാണ് നമ്മൾ പറയുമ്പോൾ ഡിമാൻഡ് ആൻഡ് സപ്ലൈ. ഡിമാൻഡ് എന്ന് പറഞ്ഞാൽ നമ്മുടെ കയ്യിൽ അതിനുള്ള ക്യാഷ് റിസോഴ്സസോ അതുപോലുള്ള കാര്യങ്ങൾ നമ്മുടെ കയ്യിൽ വേണം. എന്നാലുള്ളൂ ഡിമാൻഡ് ഉള്ളപ്പോൾ നമുക്ക് പോയി കാര്യങ്ങൾ നമുക്ക് നടത്താൻ പറ്റുള്ളൂ. അതിൻ്റെ ഒപ്പം തന്നെ വേറൊരു വശം കൂടിയുണ്ട്. ഡിമാൻഡിന്റെ ഒപ്പം തന്നെ സപ്ലൈയും വേണം. സപ്ലൈ എന്ന് പറയുമ്പോൾ സപ്ലൈ നടക്കണമെങ്കിൽ ഇൻഡസ്ട്രിയൽ ഗ്രോത്ത് ഉണ്ടാവണം, ഇൻഡസ്ട്രീസ് മര്യാദക്ക് വർക്ക് ചെയ്യണം, അതുപോലെ നമ്മുടെ ഇൻഫ്രാസ്ട്രക്ചർ നന്നായിരിക്കണം. നമ്മളുടെ ഇൻഫ്രാസ്ട്രക്ചർ നന്നായിരിക്കണം എന്ന് പറയുമ്പോൾ നമ്മുടെ ട്രാൻസ്പോർട്ട് അതുപോലെയുള്ള ലോജിസ്റ്റിക്സ് നന്നായിട്ട് വർക്ക് ചെയ്യണം. ഈ കോവിഡ് കാലഘട്ടത്തിൽ ഇതൊന്നും ശരിയായ ദിശയിലല്ല നടന്നുകൊണ്ടിരിക്കുന്നത്. ഇൻഡസ്ട്രിയൽ പ്രൊഡക്ഷൻ വളരെ നെഗറ്റീവ് സൈഡിലാണ് നമ്മൾ നിൽക്കുന്നത്. ഇൻഡസ്ട്രിയൽ പ്രൊഡക്ഷൻ ഏതാണ്ട് പറഞ്ഞു കഴിഞ്ഞാൽ വളരെ 30-40% താഴെയാണ് ഇൻഡസ്ട്രിയൽ പ്രൊഡക്ഷനിൽ നെഗറ്റീവായിട്ട് നിൽക്കുന്നത്, 38.1%. അതുപോലെ തന്നെ നമ്മുടെ കൺസ്ട്രക്ഷൻ ഫീൽഡ് 50% മുകളിൽ നെഗറ്റീവാണ്. ഇതെല്ലാം ഈ സംഗതി അഗ്രികൾച്ചർ മാത്രമുള്ളൂ ഒരു ചെറിയ പോയിന്റിൽ 3.4% ഉയർച്ചയിൽ നിൽക്കുന്ന അഗ്രികൾച്ചറിന് നെഗറ്റീവിലേക്ക് പോയിട്ടില്ല. അത് വളരെ നമുക്ക് ആശ്വാസകരമായ ഒരു കാര്യമാണ്. അപ്പോൾ നമ്മൾ ഇങ്ങനെ ഇതെല്ലാം നിൽക്കുന്ന ഈ അവസരത്തിൽ നമുക്ക് വേണ്ടത് നമ്മുടെ ഫൈനാൻഷ്യൽ ആയിട്ടുള്ള കാര്യങ്ങളെ പറ്റി നമുക്കിപ്പോ ഇത് പറഞ്ഞു തരാൻ നമുക്കൊരു എക്സ്പേർട്ട് കൂടെ എത്തിയിട്ടുണ്ട്. ഫൈനാൻഷ്യൽ കാര്യങ്ങളിൽ അദ്ദേഹത്തിന്റെ കാര്യങ്ങൾ നമുക്ക് ശ്രദ്ധിക്കാം. ഇത് എല്ലാവർക്കും നമുക്കത് ഉപകാരപ്രദമായിരിക്കും എന്ന് കരുതുന്നു. ഇത്രയും പറഞ്ഞുകൊണ്ട് എൻ്റെ വാക്കുകൾ അവസാനിപ്പിക്കുന്നു. ജയ് ഹിന്ദ്.
Thank you for your valuable address, sir. Now, for the presentation on financial planning to overcome uncertainties, I invite our resource person, Mr. V.S. Binu. He is Certified Financial Planner and Senior Process Associate, UST Global Cochin. And for your kind information, we are extremely delighted and look forward for your active participation in the webinar. Please feel free to ask your questions through the chat box. Also, please ensure your mics are muted while the presentation is going on. Without further delay, I invite Mr. V.S. Binu for the presentation. Over to you, sir.
Good morning, everyone. Am I audible?
Yes, sir.
All right. So thanks a lot for inviting me for this, and thanks a lot for giving a wonderful inaugural speech and a welcome speech. In short, I tell about me. I am basically from Tamil Nadu, Nagarkoil district of, Kanyakumari district of Tamil Nadu. I settled in Cochin for the past 10 years. I worked as an assistant professor for business schools like SEMS, DCS, MAT earlier. And I was also an independent financial consultant for investments for retail investors, high net worth individuals, and NRIs. I do plannings for mutual funds, private equities, and also for portfolio management services. And recently, I cleared my CFP and I joined as a Senior Process Associate for UST Global Cochin. So that's what in short about me. So what I'm going to give you today is, I'm not going to give a lecture on macroeconomical factors. In a simple common man's life, in everybody, we have some concerns about this COVID. Like the very nightmare word which we are hearing today is moratorium, EMI, right? Moratorium is a new word to us, and we don't know whether our EMIs are waived off or it is postponed, or we are still confused. If I take a moratorium, should I want to pay more on the EMI? So many doubts like that. So first thing is I will clear on that. I am clearing in the sense I am not clearing through lectures. I am clearing through calculations. So that I will show these calculation on Excel, where each one of you can do that on your own, because I'm not going to use any formula. All right. Second one, about uh, so if a similar pandemic happens in the future, it should not happen, but I'm telling, if it happens, and if any loss in our incomes happens, how can I plan it? That is the second part. And again, third one, the insurance, because in India, insurance is considered as a tool to save taxes, or insurance is called as an investment option. It is not an investment option, it's in hedging. So how to plan an insurance. And one more thing is about the students here, because students are very concerned about the employment opportunities. So I'm not going to give a talk about employment opportunity, but I'm going to give a talk about, or I'm going to show you a calculation about how can you decide your first salary. So these four things is what I'm going to highlight, and all these four are from finance. That is I have taken the concepts what you have learned in your finance, like NPV, IRR, time value of money, all these things I'm going to apply in Excel, and I will show you how can you plan your finance in this uncertainty period. So this is what I'm going to give you. Then later on, I will show you some very important certifications in finance, which helps you to get a better job. Not only better job, but also for a financial entrepreneurship, because entrepreneurship is very famous nowadays, and we think that to be an entrepreneur we need to invest, or we need investors. But finance is blessed with something that we don't want any investors, we don't want any investment. Our skill is enough, our skill is enough. And I will explain my life story later at the last. Okay, so how I came up in my life by using the skills in finance. So this is what about I'm going to give out. So I will share an Excel sheet now. Tell me if you can see it. Can you see this? Is it visible?
Yes, sir. Yes, sir.
Okay, okay,
Okay.
all right. Is this Excel sheet visible? EMI, can you see all these?
Yes.
All right.
Okay. Okay. Okay.
So
Yes,
now
sir.
it starts. Now it starts. It is going to be a very interesting session. And if the pandemic is not there, means I would have come to your campus and I would make you to sit in the computers and do this. I have done this already, but because of this pandemic, I am showing the calculations. Later on, when you have doubts, you can approach me. So this is an Excel sheet, and Excel is an incredible tool where we don't want to know any basics of finance. If we know the cash flows, we can do our own calculations. So first exercise is all about the moratorium concept. How the moratorium concept is influencing your loan, I'm going to show you. So let us have a situation. Shall I proceed?
Yes.
All right. So in this, the first situation is Mr. A. There is a man, Mr. A, borrows a home loan of 50 lakhs. He's borrowing a 50 lakhs home loan, and the bank charges 12% interest per annum, and given him 30 years to repay the loan. And what is his EMI? Very simple. We are going to find out the EMI of a loan, which is 50 lakhs, which has to be repaid in 30 years monthly, and the bank interest rate is 12%. So for hope everybody here is commerce graduate, commerce teachers, or commerce students. So we are going to calculate this. No formula, nothing. So now let us see what is this. So EMI is something, the amount which you pay every month, and the amount is paid multiple times, and the amount is constant. So in finance, if a cash flow happens more than once and the cash flow is constant, we call it as annuity. All right. So we are going to find out the EMI, and that EMI is an annuity. So we are going to find out an annuity, right? So any calculation in Excel starts with a equal to. So I'm starting with an equal to. Then what I'm going to find out? I'm going to finding out an EMI, which is an annuity. So the annuity in Excel is called as PMT. Okay. In Excel, annuity is called as PMT. So I open the bracket. Now you could see a pop-down menu. In that, the first thing is rate. So the Excel is asking me, I'm talking to the Excel. Excel is asking me, Binu, what is the rate? So when I am paying 12 percentage, that is for 1 year, but I am paying the EMI monthly. So I want to give the interest rate for per month. So it is 12 percentage divided by 12. So Excel asked me what is the rate for one EMI. I gave the information that 12 percentage by 12, that is 1%. Then NPR. Excel is asking me what is your total payment period, how long you're going to pay. So I'm paying for 30 years and in a year I will pay 12 times. So I'm telling Excel, it is 30 years and 12 times a year. So 30 into 12, I'm telling it. Then Excel is asking me, is there any lump sum cash flow? Lump sum cash flow means cash flow happens once. There is a misunderstanding that lump sum means something very huge. It's not huge. If 1 rupee comes once, that is lump sum. If 1,000 rupees comes once, that is lump sum. If 50 lakhs comes once, that is lump sum. So if a cash flow happens a single time, that is called as lump sum. So we have two lump sums, PV and FV. PV means the lump sum happens immediately. That is the present value. FV means the lump sum happens in future. So here a lump sum is happening in present because I am borrowing 50 lakhs, right? So that is happening. Since I am borrowing, it happens in minus 50 lakhs. Then Excel is asking you, do you have any future lump sum? After making the full payment, I'm not going to get anything. I'm not going to pay anything. So that is 0. Then Excel is asking me, when are you making the payment? Are you making the payment in the beginning of every month or at the end of every month? This is a point where I want to explain you a very important concept. It may be an eye opener for all of you. Usually, when we go and borrow loans, for example, if you go to some shops, they will tell you you can buy mobiles or laptops with 0% EMI. There is no interest at all. And to some extent, they will tell there is no EMI in the first month. They will tell that. That is not exactly what they say. It is something different. I will tell you now. So if I borrow some money from a person in the month of January, all right, I am borrowing in the month of January. The compounding of interest starts only after 1 month because I am not borrowing the money exactly on 12 o'clock at night on 1st of January. I will not borrow. Even if I borrow also, that month of borrowing is totally ignored in the compounding of interest. So the month of borrowing is not taken for compounding in the interest. So if I'm borrowing in the January, the month of January is ignored and the interest starts to compounding from the 1st of February and it ends in the end of February, and there where my first EMI is born. All right. So that means if I purchase in the month of January, my EMI compounding starts in the month beginning of February. The compounding ends at the end of February, and my first EMI is born. Technically, I have to pay that EMI in the end of February. Since we will get salary in the beginning of every month, it is postponed to March. So when you borrow money in a month, that month is not taken for compounding. The very next month is taken for the full compounding a month, and then the EMI is born, and that EMI is paid in the 1st of March. But what the EMI what you pay is the end of February. So here I am paying the EMI at the end, so I'm giving a 0. If I'm paying in the beginning, I should give it as 1. So I have given all the information to the uh, Excel, and Excel says that your EMI is 51,430.63 rupees. This is what my EMI. Now I am coming to the moratorium concept.
സൗണ്ട് കേൾക്കല്ല.
Hello. Sir, it's not audible.
കണക്ഷൻ പോയിന്ന് തോന്നുന്നു പുള്ളിയുടെ. അതാണ്.
Let us wait for some time, sir.
You're not seeing me? Hello?
Hello?
Yes, we can
Yes,
hear
the
you.
visual is okay.
Can you hear me?
Yes?
Is it okay now?
Yes, sir.
Shall I proceed?
Of course.
Okay. So let us see how the moratorium is going to work out. So for that, we should see how the EMI, and in a EMI, what is the interest and what is the principal I'm paying. So let us do that first. So months. Let us assume that in the same example, immediately after the borrowing, I am taking a moratorium of three months. So first, second, and third. Am I audible now?
Yes, sir, you can continue.
Okay. So 3 months moratorium I am taking in. And what is the interest on EMI or interest per EMI? What's the interest per EMI? And what is the principal per EMI? That means now when I am paying a EMI, for example, 51,430 rupees I am paying. In this, what much money is going into the interest and how much is going into the principal, we are going to find out now. For that also, we have the Excel function called as, to find out the interest per EMI, the Excel function is IPMT. So that's the interest. Now you give the rate. Rate is 12% by 12. And your period for which EMI you are going to find out. I'm going to find out for the first month EMI. Next, the total number of payment period, 30 into 12. Present value is the borrowing money, which value is 0, type is 0. So in this 51,430, the first EMI, which when I pay, 50,000 is going into the interest. And how much is going into the principal? Let us find now. PMT, 12% by 12, first month. And NPR is 30 into 12. And present value is my borrowing. So is 0 and type is 0. And when I am summing up these two together, I should get the EMI. Am I right? Only then my explanation. Yeah. So 51,430 rupees when you are paying in the first month, 50,000 is going to the interest. And only 1,430 rupees is going to your principal borrowing. Similarly, these are the cuts. Okay, I am taking moratorium for these 3 months. The first month interest is 50,000, second month is 49,985, third is 49,971. And principal is 1,430, 1,444, 1,490, 59. So these are the thing. Now, what really our Reserve Bank of India says is, this amount is not taken. The principal which you are going to repay is not waived off, it is postponed. but the interest is not waived off, is not postponed. This amount is taken as a new loan on you. For example, your new loan would be the sum of the interest what is paid. That is 1,09,956 rupees is what the EMI which you are requesting for. That money is on your head. Sorry, 50 lakhs, and that becomes a new loan. That means your burden is increasing. So moratorium, if you don't have the income, you can take it. If you have the income, better pay it. It is not a waiving off. So how this will influence my EMI? Let us see. The new loan is 1,49,000. Existing loan is 30 lakhs you have. So your new loan would be so if you take a 3 months moratorium, your loan is increasing by 1.49 lakhs. 50 lakhs you borrow because of moratorium, your loan is increasing 1.49. So the new EMI would be 12. 51,430 will become 52,973 rupees. So that means your EMI will increase by 1,542, and in total amount, if you see, you have to pay 5.55 lakhs in excess from to the repayment. This is the moratorium effect. All right. So moratorium means don't think that it is not zero. It is a zero cost. It is not zero cost. It is the cost of your same home loan, and this will definitely increase your EMI. There are some banks says that the EMI will never increase, but they will increase the repayment time. These 30 years may go to some another 34 or 35 years. So how come moratorium is not a subsidy or a facility given to us? It is something which will increase our burden. This moratorium is already there in the banks before, and everybody who avail of moratorium earlier know that their cost is increasing. So this is what the real effect of moratorium. But advantage is this principal amount is not taken. That's it. So now you may think that is this is what the interest I am paying in a EMI? Yes, this is what the interest you are paying in the EMI, and it will gradually reduces towards the end. When you go to the last year, this will be the principal amount, and this would be the interest. It will change. This is what the effect of moratorium. Shall I proceed to the next exercise?
Yes.
Okay. Whatever doubts you have, please mark it down. We will discuss. Next is the insurance. Insurance, actually, we in India, insurance is sold like anything just to save the income tax, or people call it as savings. But insurance is not a tool for savings or not a tool for saving taxes. It is saving taxes, but the real objective of insurance is to hedge the losses. Hedge the losses means if any loss happens to my life, it will be compensated in terms of money. All right. But are we taking the correct insurance? For example, many of you would have taken the insurance where the coverage
Not audible.
Hello? Sir, it's not audible, sir. I think there is some technical problems with the resource person. Let's wait for some time, sir.
Prithamesh, do you have any phone number of our faculty? This person, can you contact him? What happened
Yes,
to
sir. I am just contacting him.
Okay, okay.
Yes, sir. Yes, sir. Sir will be rejoining now.
Okay, then let's wait for some time.
There is some connection problem.
Hello?
Hello, sir.
Oh, sorry, some connection problems here.
It's okay. You can continue.
Okay. All right. Is the Excel sheet visible now?
No, sir.
No, sir. No, sir. Okay, now visible.
Okay, it's
Okay. Okay.
visible.
All right. All right. Okay. So now I'm going to show you how should we select the coverage of an insurance. We should not select the premium of the insurance, coverage of the insurance. So here the situation given where a Mr. A who wants to know the coverage of his life insurance. Mr. A is going to purchase a life insurance and he should know how much should be his coverage. So some details about him. His present annual salary is 6 lakhs. His own expenses is 1.25 lakhs. That is 6 lakhs he is earning. In that 1.2 lakhs he is spending for himself, his shirts, his petrol, his expenses. All right. Then his present age is 25. His retirement age is 60. So that means he's going to earn from 25 up to 60 beginning. That is 25 to 59 end. So these 35 years he is going to earn money. So he need a coverage that should give his expenses, gives his income of the next 35 years to his family if anything happens to him. And if the coverage gets, the family would put that coverage into a bank which gives 8% per annum. That means if Mr. A dies, he will get a coverage and that coverage would be put into a bank account which gives an 8% interest per annum for 35 years. And inflation is assumed to be 5% throughout the period. So these are the situations we have to find out. So Mr. A 25-year-old young man earning 6 lakhs at present, his income will increase by 5% because of his inflation. And out of 6 lakhs, 1.25 he is spending for himself. So he's going to earn up to 60. Now you want to tell him that what should be his coverage. So the financial concept what we used here will be the present value of lump sum and the net present values. So let us calculate it first. So the age, we have to list down his cash flows. So from the age of 25, 26, he's going to earn up to 59 and so 59. So the cash flow, that is the salary. His salary is now 6 lakhs. And since the inflation is 5%, he should get at least a 5% of increment in his salary. So I'm assuming that he will get a 5% hike in his salary every year. So similarly, for 59 years, up to 59, he will get these cash flows. So this is going to be his cash flows for next 35 years. So his expenses of Mr. A, because when you take insurance coverage, you can ignore your expenses because once if you die, you won't be there for the expenditure. So the coverage you can take only for the rest of your family expenditure. So we have to find out what is his expenditure and how it grows every year. So his expenditure is 1,20,000. It grows by 5% every year. Right. Goes by 5% every year. So this is how his expenditures will increase. And now family requirement. So what family actually requires? So when he is no more, his expenditure is reduced and what is left is what family want. So if he dies now, his family will get 4.8 lakhs, which is enough to spend for 1 year. So next year, again, it will increase as per the inflation. So now he should get a coverage, which is going to give him all these money for next 35 years. So what should be that coverage? We have to find out. So coverage, we have to find out by using a tool called as net present value, NPV. And in that, we have to give the rate. Rate is because when you get this coverage amount, you put that amount into a bank, which is assumed to be giving you 8% interest. And then the values is what? You have to select all the cash flows. And then you want to add 1 plus 8% to it to get the beginning of the year. So that means 1 crore 8 lakhs 33,295 should be the coverage. Just check your insurance policies. Do you have this coverage? If you have this income, check your insurance policies. Do we have this coverage? If not, it's time to upgrade your insurance policy, right? So because of this pandemic, insurance, health insurance and life insurance, both are very important. Health insurance also we can plan like this based on the medical health condition of your but life insurance you cannot ignore because the pandemic is very dangerous nowadays. So to have a peaceful life for your family members, it's always good to have a good insurance with a good coverage. For example, if you have only 20 lakhs coverage, do you think that your family can survive for a long? Because 20 lakhs is something very less when comparing to 1.1 crore 8 lakhs, right? So this is how insurance is planned in real life. So shall I proceed to the next one?
Yes, sir.
Next is a very interesting plan because the big problem what we faced, every one of us faced when the pandemic outbreak starts, we lost our income or we partially lost our income. We are unable to manage our expenditures. So we sold our properties or we would have broken our fixed deposits, many things. Because we till this day we don't have a plan for disaster management in a personal life. So it's time for us to plan a disaster management because let us assume it should not happen, but let us assume that if a pandemic happens similarly next year, so how could we manage our expenses, household expenses? So here is the situation. Let us assume that we need rupees 10,000 per month for our household expenses. We are assuming that a 10,000 rupees is enough in the current scenario for you to manage your household expenses for 1 month. If a financial loss happens like the present means, how much should we keep in our hands to manage the 6 months and how much should we save every month? What I'm telling you is you should plan a 6 months because if anything happens, I need money to survive the first 6 months. The next 6 months I can do something, or you can plan for 1 year also. That's up to you. That's up to the financial health what you have. So 6 months I'm going to plan. So I'm planning, I'm putting money into a bank which gives me 6%, and I am assuming 5% inflation every year. So the first year, all right, this is the year starting on, and monthly expenses is 10,000. You are assuming because you need 10,000 to household. So 6 month expenses that makes 10 into 6, 60,000 you want. Bank interest 6%. Now, how much should I save per month for next 1 year to get the 60,000 to make ready to manage my disaster which may happen next year? All right. So again, now saving per month. So you're going to save money per month. So that is again an annuity because it is happening more than once and it is constant. So I'm using the PMT here. The rate, the bank is giving me 6% and I'm paying every month. So it is 6% divided by 12. Next is the NPER. How long I'm going to pay? I have 1 year time. So it's 12 times I'm paying present value. When I start a payment, I don't have received any money. I don't pay any money in lump sums. So it is 0. Future, I want 60,000 in future. And 1 because I want the money in the beginning of the period when it happens. So if I save 4,839.79 for next 1 year into a bank account gives me 6%. I will have 60,000 to face the disaster which may happen next year, and that's enough. In case the disaster is not happen next year, the 60,000 is there in your pocket. Do you think that this is enough for the next year? Definitely not, because next year, year after next year, inflation will increase your expenses. So let us see how it will affect. Second year, your monthly expenses will increase to 5% inflation. All right. So that is equal to 10,000 is increasing by 5% inflation. That becomes 10,500. Now the money what you really want is 63,000. So you have only 60,000. You want 3,000 more. So for that, you want to start one more saving. The 60,000 is there, but the inflation has to be compensated. To compensate that 3,000, you want to make a small investment. How much is that? I will show you now. So that is again PMT, 6% by 12, and your number of period is 12. And your present value, yes, you have the 60,000 now, so the present value is there. Future value is 63,000. Type is 1. So first year 4,839 you have to invest for 12 months. After that, just invest to meet the inflation. So 56 rupees is enough. So you can extend your investment similarly. So how many years goes on, you will have a money to face the disasters. So like this third year, fourth year, and fifth year, let us assume. So it is again into 1 plus 5%. It goes on like this, and it goes on like this, and it is again like this. All right. So this is your financial plan. So now, first year I pay 4,839 for 12 months. Then every year I pay, the next year I pay 56 every month. Then I pay 59 every month. I pay 62 every month. I pay 65 every month. So if you plan like this, any disaster happens, for 6 months, your household expenses are safe. If expenses, if 10,000 is not enough, you can put your own money and you can calculate. This is how you can save your disasters or survive your disasters financially. Shall I go to the next one?
Yes, sir.
Next, students, you must listen to this very interesting concept, because in interview, you may face a question like this: what is the salary expectation? Because in many interviews, they ask this question and you will tell so many answers. Probably these placement trainers, motivational speakers gives you so many explanation on how to answer this question, but till now we don't know an exact answer to answer this. So financially, I'm going to give you an explanation on this. So just imagine you are doing an MBA program, all right? And you must know what should be my first month salary, or in an interview, how can I answer this question? So before that, you should have some assumption. That is, I have taken loan for my MBA fees, or a BCom or BBA, whatever it may be. I have taken a loan. If not loan, the opportunity cost is there. So let us assume as a loan. Interest on loan is 12% per annum. It's an assumption. I don't know the real rate of it. It's an assumption. And repayment period is 5 years. And your salary increment is 5%. So you have taken a loan for 12% on education, and you are going to calculate as per that. In case you have not taken loan, means you may someone of you may think that I have not taken a loan. My father has paid money from his pocket, but it has an opportunity cost, right? If father hasn't paid that money for you, and if you put that money into a mutual fund, it gives him 15% interest. So it has an opportunity cost, and you should get a get a salary which beat that 15%. So anyways, cost is there. So let us see how it could be done. So let us start from the years. 0, 1, 2, 3, sorry, 1, 2, 3, and 4 and 5. The cash flows. Cash flows here. The first year is the 0th year is what the money you are paying as a fees in total. Let us assume it as 3 lakhs. The first year is what your salaries. So let us see the salaries here. When you study, you will not get any salary. Salary month. Right? And then let us assume that you are getting a salary of 15,000 per month. That makes 15,000 into 12. That makes 1,80,000. And your salary increase 5%. So that is into 1 plus 5%. Your salary increase like this, and your annual cash flows increase like this. All right. Now, how can I come to a conclusion that this salary is okay for me? For that, we have a financial tool called as internal rate of return, IRR. You should get an IRR that should be equal to your loan rate or more than the loan rate. If it is so, this income is okay for you. So I am calculating the IRR of my cash flows. So I will get 57%. Don't feel happy. 57%. That's an absolute return of 5 years. You convert that to yearly. So 1 plus, I'm taking the geometrical mean because it is having discounting and compounding. So 1 by 5 minus 1. So when you get 15,000, and if you pay 12% loan, and if you have paid a 3 lakh fees, 15,000 is not enough because it is giving you only 19%. So let us increase to 17,500. Somewhat close, somewhat close. So if it is 18,000, no, is 19,000. Yeah. So if you paid 3 lakh fees, and if you paid 12% on your home education loan, your salary should be 19,000. You can tell this to the interview. You can tell the interviewer asking you, what's the salary you're expecting? It's 19,000. He asks you why. Only then my IRR will be 12%, sir. He will be happy to take you, man. So this is how salary is calculated. So I have done my 4 calculations for planning. Wow, how come this is related to the pandemic is unemployment? As sir told, someone coined, sir told that there is unemployment. So unemployment is there, but you should have a look on your income also. Don't expect a huge income and all now. Make an income which is okay for you, and you should have a threshold level or a yardstick to decide, am I getting the correct income or not? So for that also, you can use this. So I have done my part. Now, shall I give a presentation on the certifications in finance? Shall I do that?
Yes.
Okay, sir, go ahead.
It may take another 10 minutes maximum. So students who are aspiring a career in finance, uh, there are many opportunities for you other than this CA, ICW. Similarly, we have many more certifications in finance, which is not much popular in our country, especially in South India. So I will show you those certifications. These are, is it visible?
Yes.
Okay. So these are some of the certifications. This NIASM is a certification by Securities and Exchange Board of India. The SEBI is having its own financial initiative called as National Institute of Securities Market. They are running more than 25 types of certification programs, which is having a good uh, what do you call employment opportunities as well as entrepreneurial opportunities in it. And another CFA, this is a chartered financial analyst. This certification is issued from an authority in United States of America. It's very difficult to pass. Again, CFP is again it's a certified financial planner, which is by FPSB India, again a subsidiary unit of FPSB Denver, USA. This is also a bit difficult to pass. These are the bit difficult to pass exams. And out of this, I have these two certifications. So I will explain about these two certifications. So first about NISM. As I told, it is an education institution of initiative of SEBI. It has 26 certifications, and these exams is only for Indians. For non-Indians, you cannot run this examination. And PAN card and Aadhaar card is mandatory for this examination. And it's an online multiple choice questions exam, which happens in exam centers. In Cochin, we have the exam center in Ravipuram. Anytime you can go and write the examination, like you can reserve the seats and go and write the examination. The exam fees would be approximately 2,000 rupees, 2,000, including the GST. If you fail, this money will not be refunded back to you. And it is a digital certificate. You don't get any paper certificate. You will get only the digital certificate. And out of this 20,
Sir, it's not audible now.
Connection പോയിട്ടുണ്ട്.
We'll still wait for the conclusion, sir. Preda ma'am, will you please keep contacting the resource person?
I'm contacting him, ma'am. Let us wait. I'm just calling him.
For all the participants, please listen. You have your feedback form given in the chat box. You can fill it. And after this session, we'll have a session for discussing your questions. After this conclusion part, we'll have another session for discussion of your questions. Please wait.
Sir will join now.
Okay.
hello, sorry,
Sir has already joined.
Okay, sir.
I finish off in 2-3 minutes.
Okay.
Can you see the PPT?
No, sir.
When it is visible to you, please let me know.
Yes.
Yes, I think now it's visible.
All right. So as I told, the process industry is again a place where you can have a job within the office with no sales targets. Companies like HCL Tech in Coimbatore, that is the State Street, is taking in BCom students with NISM, and UST Global, again in Cochin, they are not taking BCom with NISM, they are taking MBA with NISM and other stuff. Again, JPM, Barclays are in Bangalore, which companies or very big companies. Once when you have gained enough experience, you can focus into those companies. Now you can look into companies like EY, or State Streets, or to some extent UST Global as well. So these are the opportunities in the NISM. Then about the CFP, as I told, the CFP is issued by the Financial Planning Standards Board, Denver, USA. It has 4 exams. It is one of the toughest exam in the world, and only 1.8 lakh CFP holders in the world, and only 1,907 in India. It is again a MCQ question which has a digital certificate, and only financial calculators are permitted. Okay, and I am one among that 1,907 CFPs in India. This is my CFP certificate. It looks like this. And these are the 4 exams. The beauty of this course is you have to finish these 3 exams to approach this final exam. Once when you pass this final exam only, you will get the CFP status. Now, if you pass this examination, you will get the investment planning specialist certificate. And again, when you pass this, you will get retirement planning certificate. Similarly, when you pass each of this examination, you will get specialist certificates according to the exam you pass. So that's the end of my session. Now it's over to you.
Thank you,
Questions?
sir. Thank you for your wonderful session. Now, we'll go ahead and take some questions for discussion of questions. Here, we have a question. Sir, can you hear me? Is it audible?
Yeah, I can hear you.
Okay. During this pandemic period, whether the share market investment is really worthy or not?
Yeah, I expected this question from you. See, thing is, uh, what we are doing is not an investment. Putting money into share market, waiting for a few days, taking back a huge returns. This is not an investment. This is called a speculation. This is called as a type of gambling. So investment means you should have an objective, you should have an investment flow, you should have a time. For example, retirement planning is an investment because after retirement I need money, so I have to plan it accordingly. So anything where there is a planning is called as investment. And in this pandemic period, investing into share market is good or not, that I can answer only after knowing your objective of investment. If you don't have an objective of investment, it is speculation or gambling. For gambling, nobody can give you an answer. Hope you
Okay,
have
sir,
answered.
we'll move to next question.
Yeah.
In this COVID period, what are the measures we have to take for a better planning? I mean, in the financial management.
As I thing is, cut down your unnecessary expenses. All right. Save first and
Okay.
spend next. What we do is we spend and save. Don't do that. As I told, put your retirement plans, put your vacation plans, put your home plans, or home loan plans. Put all your plans together. We have children education, we have the marriage, we have the vehicle, we have the vacation, we have the retirement, estate, everything. Plan it well, and then allocate fund accordingly. And when you get the salary, put those funds initially, and then spend. So have a planning. We put budget for our home expenses, but we have to budget our future expenses as well.
Okay, sir. Next question.
Yeah.
What are the present uncertainties in disaster management?
Present uncertainties in disaster management means, as I told, in financial point of view, your investments values would have come down, right? For that, you have to wait for a long. Otherwise, reduce your investments into short-term equities, go for a long-term, or put money into the debt, fixed securities like debts or bank deposits, and don't buy gold from the jewelry shop. Okay, buy it in ETF, because in jewelry shop what you're buying is the 22 karat gold, which is not an investment at all, where you pay the GST as well. So buy the gold as 24 karat, not the physical gold, buy the ETF. Because in ETF means you don't want to preserve it somewhere. It will be in your Demat account. So buy gold through the ETF and should have a proper financial plan for your future. And as I told, there is something called a disaster management plan, which is my third exercise. Do that immediately so you can save your losses.
Okay, thank you, sir.
What
For
is ETF, sir?
ETF means it is called it is expanded as exchange traded fund. That means there is something called as authorized participants in the stock exchange. That means they will convert the physical gold into 1 gram electronic gold, and they will list those in NSE and BSE for buying and selling. If you buy that, it is equivalent to buying a real gold, all right, and you can keep it in your demat, and the price fluctuates based on the price fluctuations in the real gold market. So if you want, maybe later you can sell it and take it as money, or if you want to get it as a gold, it means like demat, there is something called as a remat. You can get it as a gold as well.
Okay, sir. It is better to change the EMI and make deposit rather than making the payment of EMI.
If you if you are affordable enough, you have the money, don't go for EMI, don't go for loan. If you have money, means spend it. And again, in the moratorium case also, if you have money to pay the EMI, means better pay the EMI. Don't avail the moratorium. It will. I haven't shown some figures. If I have shown that figures, you will be shocked enough to see that that real calculations I have hidden from you. So better don't avail loans much.
Okay, sir.
okay, sir. Any more questions?
I think sir is asking, Saji sir is asking some question. Sir, your mic is muted.
Okay, sir, what is your opinion for purchasing Sorginin gold bond of RBI?
Wonderful investment, sir. Because that's the only investment in India which is zero risk. No risk at all. Because government is taking money from you and they are not investing anywhere. So definitely you will get. Even if you buy the corporate bonds, all right, if you're buying a corporate bonds, there is a risk because if corporate meet losses, they will not pay you back. But in the case of government bonds, one of the best investments in the country. The returns will be less, maybe 6% or 6.5% maximum. But it is always a very good investment. You should always, it should be there in your portfolio.
Sir, you already told that the share market is a speculation business. What about the mutual fund?
Exactly. Mutual funds is also go into speculation if you don't investment with an objective. For example, I will tell you, my clients, 90% of my business was with the mutual funds retirement planning. For example, if a young person come to me, so some 25 years old person comes to me, my first advice to him is go for retirement planning. He will laugh at me. Why should I worry about retirement? You should worry about retirement now. Only then your investment will be less. You will get more returns. So in that case, he is just 25 years old, and he is having another 40 or 50 years more for his retirement. So he can take a risk and put money into the equities. He has very long duration. He can even opt for a mid cap. All right. So in that case, I will advise him the mutual funds which is portfolio is made of mid caps or blue chips. All right. So that portfolio I'm offering him, and it's my duty to check it every month or every year whether his the returns are met. If not, I have to make a revamping. So definitely mutual funds is risky, but it is based on the term it is going for. But the case of the difference of mutual funds in stock market is, in stock market you will not get diversification. For example, if you have 1,000 rupees, you can buy only 1 or 2 shares. But at the same time, in a blue chip mutual fund where the unit will be only 45 rupees, with 1,000 rupees you can buy almost 20 with 200 units with a wonderful diversification, right? and you will get a fund manager, a professional service also. So in my investment, in my portfolio, I am not going to share market anymore for the past 3 years. I am doing only with mutual funds.
Yeah, but that is your opinion. The mutual fund is very good
Yes,
for investment for long period.
long period, as well as who is having not much knowledge about finance can go for mutual funds.
Mutual fund.
I am one of the person who is having a good knowledge about investment. Even then, I'm not going to stock market because my work time is not okay with the stock market time.
Yeah, yeah.
So I'm going with the mutual funds only.
But sir,
What about
the risk factor is
commodity
greater
markets?
in mutual funds.
Yeah, it is there. It is there. It is there because it is based on the scheme which we select. It is based on the fund manager of the scheme, and there is something called as ratings. Risk is there. If you have more than 5 years time, go to the mutual funds. If not, put money into the fixed deposits, cheat funds, and peacefully you can make the investment. If you have more than 5 years, means you can opt for a mutual fund investments. Even
What
less
about
than
the
that,
commodity markets?
commodity market is not for investors or retailers like us. It is for someone who is doing commodity trading, because commodities is a derivative.
Yes.
It's a derivative. It is not an investment. So if you have a commodity dealings, you can opt
Sure.
with that.
What about the debit fund, sir?
Hmm?
Debit fund.
Debit funds, as I told, previously someone asked me, mutual funds is risky. As I told, even in mutual funds, there are zero risk investments are there, which is called as GSEC funds.
GSEC.
GSEC funds means it's a mutual fund. As you told, it will have only the RBI's treasury bills will be there. So that is zero risk. Even
Yeah.
mutual funds, you have the risk-free investments like GSEC funds, debit funds, sorry, not debit, debt funds. In debt funds, you will have only the debts into it. The fixed deposit schemes or even the corporate bonds will be there. It is risky, but it is depend on the things what we are having in the portfolio. For that, we can go by the ratings. You can see the ratings of the debt instruments inside, because equities are not rated, but all the debts are rated. You can see the ratings and you can take the investments as per that.
Okay, sir, we have one more question.
Yeah, madam.
The question is it better to repay the loan amount in one settlement before the period of time?
Yeah,
Will get the interest deduction or not?
definitely. But if you have taken a loan for 30 years, means don't settle in the 29th year. Because when you pay the EMI, as I shown you, when you're paying 51,000 EMI, the first month EMI 50,000 is going into interest. Only 1,000 rupees is going into the principal. So initial days, the interest will be huge, and when the days goes
Principal.
gradually, interest comes down, principal goes. And if you at the last you are settling down in the 29th for 30-year loan, if you are settling in the 29th year, means it's total waste. So as much as possible, you can settle down. When you're settling down, definitely all these interest will be discounted to the year of settlement, and we can do it. Even for NPV method, we can use to find it out. It's
Sir,
good
I
to
have
settle.
one doubt. Sir,
Yeah,
I
tell me,
have
sir.
one doubt.
Tell me, sir.
Suppose I settle the loan after 2 or 3 years. Is any change in EMI?
Yeah, if you settle some money, the EMI will changes.
Change.
Yeah, definitely it will change. One more thing, some banks will never change it, but they will reduce the
Yeah.
tenure. They will reduce the tenure.
The period will change.
Yes.
Tenure
One more
will.
thing. Yeah, one more thing I want to tell you. That big scam has happened a few months ago. There is a person who has taken a loan from a particular bank in 2006. So during that time, the interest rate was around 14%. All right. He was paying the EMI, but recently the interest has come down to 7% or 8%. So if it is a floating rate interest, means his EMI has to come down.
Yeah.
Otherwise, the EMI extra is taken, should be put into the principal, and his tenure has to come down. But this bank hasn't informed anything to him. Usually, all the privatized, all the nationalized bank and banks like SBI, sorry, South Indian Bank, Federal Bank will do this. They will reduce the EMI, or they will make the payment into the principal and reduce the tenure. But the private bank will never do that. All right. So when this is exposed, what the explanation of the bank is, no, you must come and give us in writing.
Yeah.
The people who don't know about these things, they're totally unaware. They're totally unaware. So see, he has borrowed 50 lakhs. He has paid 94 lakhs in this past 16 years. And this 94 lakhs, only 14 lakhs is taken to the principal. If he has gone and bring down the EMI, means by this time he would have closed the loan. Right? So loan is always very dangerous. We should have a financial planner for everything.
What do you mean by private banks?
Private banks means those banks who's having majority shares in the hands of the private. For nationalized banks means majority in the hands of the government.
No,
For
even
SBI,
federal bank is not a.
federal bank is not a. I'm not telling that. I'm not telling that private bank will do that.
No.
Right? What I'm telling is nationalized bank and South Indian bank and federal bank is not doing this,
Yeah.
because I'm having dealing with them. But
Schedule.
other private banks, which I cannot tell in
Yeah,
a
yeah.
public
I
place,
understand.
there are some banks will never tell this to the customers.
Yeah.
If you go with the legal case, it won't stand.
That bank means it is controlled by individuals. So
Yes.
we need not
Yes.
elaborate on that.
Yes.
Yes.
I will meet you personally and I will explain, sir, if possible.
Sir, are you ready to come over to our college after this pandemic time?
Yeah, sure, definitely I will come.
To take the class for our student.
Sure, definitely.
Okay.
In last year, he reached the college, sir.
Yeah, last year.
Okay.
Yeah. Last year I was not a financial planner, certified financial planner, but this year I became a certified financial planner. I'm a bit qualified enough now.
Yeah, very good. Thank you.
Sir, we have one more question here.
Yeah.
It is, what's your opinion about starting an entrepreneurship in this pandemic period?
Yeah, very good. That is, you can start an entrepreneurship based on the product which you are going to launch. All right. It should be a core
Okay.
product. At this time, you cannot start a finance consultation. This time, you cannot start a mobile app or a software development. You can start a food-based industry, or you can start this healthcare or pharmaceutical-based. Anything core you can start, but it's advisable not to do anything apart from this. You can wait.
Okay, thank you, sir. Thank you for your valuable suggestions and answers. It seems that we don't have further questions and we have covered all of our questions. Now, to propose a vote of thanks, I invite Mrs. Asha NK, the head of the Department of Management Studies. Over to you, Asha, ma'am.
Can you hear me?
Yeah, ma'am, it's audible.
Distinguished guests and dear participants, myself, Asha NK, HOD of Management Studies, as an honor and the privilege to extend vote of thanks on this occasion. Thanks is the best one single word, the beautiful and powerful prayer one can offer. So, I take this opportunity to express my sincere thanks to all people who made this webinar possible. First of all, I thank our eminent speaker, Mr. V.S. Binu, who spared the time from his busy schedule to grace this webinar with his extremely relevant address on financial planning to overcome uncertainties. I would further extend my sincere thanks to our respected Ernakulam District Committee Secretary, Janab Liaquat Ali Khan, and our College Management Committee Chairman, K.M. Khalid, and our Secretary and Correspondent, Nawaz Abdullah. I thank our Principal, Dr. Shaji K., for his constant support and encouragement. My sincere thanks also goes to my Principal N.C. Vinayakumar, IQAC Coordinator Tosin Jose, technical team, comparing Mrs. Shaji Mall, my faculties, management department, and my dear students made this as a successful event. My deep sense of appreciation and thanks to all the participants who choose to live with us and attend the webinar with a great enthusiasm and made a successful event. Last but not least, I thank all the teaching and non-teaching staff of our college. Once again, I thank you for being with us. Have a wonderful day. Thank you.
Thank you, ma'am. So, with this, we have come to the end of today's session. Thank you all. Hope it was truly effective session for us. Thank you for spending your valuable time with us. See you next time. Stay safe. Thank you.
Okay,
And we have another webinar on 12th.
Okay, sir. We'd like to inform you that